Let's get in another corporate then, Nalco. Well, that's been the stock that's been in focus for the last couple of days. Remember, they reported a good set of numbers backed by both their divisions. That's the alumina as well as the aluminium business. Both of them have done well on a quarterly basis. The company also given a bit of a sweetener because they declared another dividend of 3 rupees per share. Mr. Sridhar Patra, the CMD of the company, joins us on the show. Hi, Mr. Patra. Always good speaking to you. Well, first things first, let's start off with your outlook on aluminium prices as well as what was the last, consignment of alumina. What was the price that you dispatched it at? I remember in the past you were talking about, aluminium price of $2,700, $2,900 per ton, but it surpassed that as well. So steady state, what should it be?
Yes, you might have seen the 9 months result what the company had published. And Q1 to Q2 we have done better, and Q2 to Q3 also we have performed better. And I am quite confident that the market analysis what they are making at present for the last quarter of financial year 21-22 will hold good, because almost another 15 days of February and 1 month of March, a short span of 1.5 months is there. So the prediction appears to be prevailing in the market.
Yeah.
And the market realization also will be good.
That's correct, and Mr. Patra. I absolutely agree with you that Q3 has been very good, and by the sound of it, you're sounding very optimistic about Q4. So that's going to be good for your numbers. But more than a Nalco specific issue, given that you have been in the sector for a long time, I wanted a sense on aluminium pricing from here on. What is the band you're looking at, and what about alumina? That we don't get live rates, so I wanted to know the last consignment left at what rate. Please tell us that.
See, the last consignment cannot be a basis, because normally when the tenders are floated, it is 1 to 2 months in ahead. And some logistic constraint also has deferred some shipments, because across the globe the vessels are not available. So the buyers have deferred their shipments. So last consignment cannot be taken as a basis. Rather, what the tender has been floated and what we will be predicting for the month of March, that will be normally the alumina price which we get, it ranges between 17 to 18%, when the metal price is around 2,200 to 2,300. Now the metal price is around 3,000 plus. So with this, the average of 21, 22, if you see the alumina price ranges between 12.5% to 13%. But the last tender what we have discussed, it is around $460, which is quite good. And we have made some term contract, and the term contract percentage we have received higher than 12.5, what is the last 9 months average prevailing in the globe. So we are quite confident that this price will prevail and we will be getting a better margin in the Q4.
Okay, so when you say better margin, Mr. Patra, the last 3 quarters have been really volatile. If you look at the aluminum Ebit quarterly run rate, I mean, you've done 750 crores around in Q3. It was almost 800 crores in Q2, and in Q1 it was 400 crores, so a wide range. Can you tell us what is a sustainable EBIT range for you in the aluminum business in the next few quarters?
If you honestly ask, though I am in the sectors, I should not be very much selfish. About 2,500 to 2,600 LME is normally considered as a good sustainable price, because with 2,500, 2,600, it will also give a good margin to the smelter as well as refinery. And price movement beyond 2,600, it is basically a temporary phenomenon due to short-term supply-demand gaps. Now, the Chinese aluminum city, they are suffering from COVID, so they have restricted the production. And in the European continent, basically the power crisis in the winter pushed the power tariff up. So the European premium what we get, it is becoming high. So in that case, Ukraine and Russia issue, these are all the people analyze that it will not be long-term issues. Because COVID now hardly 1-2 months, it is to be normalized. So this short-term has widened the gap between the production and the consumption. Q3, there was a gap, and the production was lesser than the consumption or demand. So it has a gap of 0.20 million tons. And in Q4 also, the production and demand gap is likely to be widened, and it is 0.46. And in the financial year 21-22 as a whole, if you will see, the gap will be around 1.87 million ton, where the demand is more.
Okay, this you're talking about aluminium deficit globally.
Yeah, aluminium globally.
Got it. All right, good number. So more than 1 million tons of a deficit is what you're seeing in production and demand. Okay, we get that, and that's one of the factors that is driving up prices, coupled with the European power crisis. So we get both those 2 points. You know, for our viewers, they'll want to know about Nalco's growth plans from here on. So you were putting on that 1 million ton alumina, refinery. I think in the next year or next couple of quarters is what it's expected. So give us a sense about this, alumina refinery. When does it come on stream? In which quarter? Is it a story of FY23 or is it a story of FY24? Go ahead, sir.
If you see, the original schedule was in financial year 23-24 will be commissioning. Due to the COVID, there was a deployment of the manpower which was made for the project. These people have left, and now it has started mobilizing. And almost all the packages which are on the critical path, we have already placed the orders. So I am quite hopeful that despite of all odds, we will be commissioning in 23-24. Hopefully second quarter will be the commissioning schedule. We will meet that. By which the existing capacity of 2.1 million ton will increase to 3.1 million ton.
Okay, got that. Can you tell us a little bit about, lest we run out of time, post the dividends payout, what is the updated cash in the books for the company? And can you tell us over the next 1 year, what would be the utilization of that cash?
The cash which you are seeing, because 2 reasons. One is it is a zero debt company, and the sales realization what we are getting, definitely that will add to the corpus. And this alumina refinery, we earlier thought to invest with a debt and equity, but so far we have not taken any debt. We are funding from our equity. Okay. And after this alumina project is taking up, then we will be giving thrust on the smelter and power plant. Power will be sourcing from outside. We are planning to source power from outside from any producer within our vicinity. And 0.5 million ton smelter expansion also we are proposing. So this cash, what is used, it will be used as a equity funding for the ongoing capacity expansion.
Okay, all right.
And we have also paid dividend rupees, first interim dividend 2 rupees per share and second interim dividend 3 rupees per share. Both the interim dividend works out to 5 rupees per share. It is 100% of the paid up capital.
Mr. Patra.
And seeing the profit margin and all these things, the final dividend will be declared and paid. So this particularly, the cash reserve will be utilized by way of dividend payout and investment in the ongoing business expansion.
Mr. Patra, you briefly spoke about power, your Utkal blocks, that's Utkal D and Utkal E. The street has been waiting for them to get commissioned. Which one gets commissioned in this financial year? And at current prices, what will your savings per ton be? Go ahead.
Utkal D and Utkal E, basically there are 2 coal blocks which is having 2 million ton capacity. The peak rated annual production capacity is around 4 million tons. And shortly we are awarding the MDO engagement for Utkal D and E combined together. All statutory clearances of Utkal D are in place, and the statutory clearances of Utkal E are in different stages, and we are expediting the same. We are quite hopeful that any mines which is MDO is engaged, that will take minimum 1 to 12 months to 18 months for development to create infrastructure which is required as a prerequisite for mines operation. So we are quite confident by 23-24, we'll try to extract coal from our own mines.
And what is the saving at current prices?
This MDO which will be given at a very competitive rate, and this coal will replace basically the e-auction coal what we are getting. At present, for my entire operation of smelter and refinery, around 80 lakhs tons of coal is required, and out of which around 35 to 40 lakhs tons we are getting from e-auction and all these things. So this 4 million ton what we'll extract from Utkal D and E will replace the e-auction coal, and e-auction coal depending upon supply and demand forces, it ranges between 2,500, 700 to it goes up to 5,000. So my production cost will be much lower than this, and whatever may be the cost, I will assure that 400 to 500 per ton, it will add to the bottom line of the company.
Okay. So in terms of a timeline, when this additional alumina and aluminum capacity comes on stream, what will the total capacity look like at that time? Say in FY24, what are you, forecasting in terms of volumes?
Basically, that will be 3.1 lakh ton of alumina. And smelter, it will take some more time because the concept to commissioning of any smelter, it requires around 48 to 54 months. So we have started simultaneously activities.
Yes.
Around 26, 27 or 27, 28 early, I am quite confident that this smelter will come into operation for another 0.5 million ton.
Okay. Okay, that's a long time away. In the near term, the street would like you to clarify yet again, no plans of Nalco getting, privatized, or it's not a divestment candidate, right? I mean,
at present, the government of India holds 51.28%. And what you are getting from the public domain, that we are also getting. The source and authenticity of the news is not known to us. We have not received any formal communication from any corner in this regard.
you're right.
So it will be premature to offer any further comment in this regard.
And ultimately, it's the government's stake, but we just said in case you heard something, we would like to hear from you, because maybe you'll be a little bit more informed than us, or maybe even, our viewers as well as your shareholders. But it's been a good chat with you, Mr. Patra. Congratulations on what you have done in the first 9 months odd. We look forward to chatting with you in Q4 as well. And by the looks of it, it's shaping up rather well.
Absolutely. And look at the way the stock has zoomed, right? Yeah. I mean, it's been a big wealth creator for investors.